there are a lot of markets to trade. You know, I talked about there are 370 active futures trading markets. Maybe 30 of those are trading with a lot of liquidity and a lot of volatility. So you have to understand what markets are best for you, and then how to best trade them based on how much equity you're willing to commit. You know, there's no doubt that, you know, there are people out there who've taken $1,000 to $100,000 or pyramided to $1 million. But in order to succeed in any fashion, you have to understand how you're going to get there and what markets you're going to trade, and really what risk and reward ratio is for you. Sometimes, because of the level of risk you're willing to accept, there's no way you would ever be able to take a $1,000 account to even $2,000 because you're just so risk averse. So you have to understand, based on your risk reward scenario, based on what the markets, what's happening in the markets, how easy it will be to obtain your goal. In our trading plan questionnaire, there are about 30 questions, and the questions really cover a broad range, from the different types of markets to the level of volatility you're willing to accept, and then to how your emotions react to the concepts of fear and greed, and how you're going to subdue those emotions of fear and greed so that you can realize each trade is isolated and is part of a bigger plan. In our new book, The Futures for Small Speculators, the companion guide, I took all of these 3 tools along with even more detailed information, and the trading plan questionnaire is definitely available there. I also have a sample filled out trading plan questionnaire in there so that you can have an idea of how to trade and how a trading plan questionnaire is completed. Great tool, and I recommend it for everyone because as a business, this would be your template for your business plan. In fact, many of my clients use it as their business plan when they trade futures. Then we come to the trade worksheet, and this is used specifically for each trade. The reason why we have a trade worksheet is to figure out what our real profits are and what our real potential losses are on each trade. It really objectifies the trade. It separates the trade from ourselves. And there's a lot of different ideas and philosophies when it comes to trading. Some people like to swing trade, some people like to day trade, and some people like longer term trades. With futures and with the amount of leverage that's available, I tend to take a longer view. And so part of that is taking your time to write out these scenarios. Futures, more so than any market, has a high tendency to trend, and we'll discuss that in the analysis part on how the trending really affects the long-term development of a trade. So when you do this work of writing the trading plan questionnaire out or design the trade worksheet, you really shouldn't worry about whether you're going to miss an opportunity, because if there's an opportunity today, there's most likely going to be an opportunity tomorrow and the day after, you know, God willing. So the whole point is, don't overrush yourself in deciding what kind of trade you should take. Dissect it, figure out what your entry points are going to be, figure out what your exit points are going to be, and then determine how much you would lose based on the margin that you had to put up, because margin may be different from the total account equity that you have, and how much you may make based on the margin. And then figure out what that profit translates into profits in your account. If you made something small as 15% or 20% a month, well, over the course of a year, you've done more than double your money. So you can use this trade worksheet to determine what trades have value for you and the type of value that they do have. You also have an opportunity to clip on the type of charts that you use to determine the trade and to make a pretty decent package of it. And again, it's just to objectify the trade so you don't make impulse decisions. The third tool that we use is a trading journal, and it's twofold. The first part is we use it to accumulate the trade worksheets and the charts that we created. And the second is we write the information down necessary for us to our emotions and our feelings, how we're going to trade, what our emotions and feelings on how we did the last trade, and then our emotions and feelings when we get out of that trade. It's a way to accumulate the long-term goal. It's a way to accumulate the information to reach our long-term goal. It's a great source of information, and it just shows you over the long run that this may be one trade of 50, one trade of 100, and that your goal doesn't depend on one trade. And so it also gives you perspective. over time, maybe after 10, 15, 20, maybe even 30 different trades, trading in this format, you can figure out what markets are really good for you, whether or not the system you're using is working, and whether or not you're on the right track. And you'll have it documented, and it'll be right there for you. And who knows? Sometimes your hunches, you may have a hunch, and you wrote down that hunch in your trading journal, and it didn't work out. And maybe sometimes your hunches just don't work out in the marketplace. So it's a good way to accumulate the data. Now, I covered a lot of information in Section A. We touched upon what futures contract pricing means. We touched upon hedgers. We touched upon speculators. We talked about basis. We touched on backwardation, contango. We even talked about the introduction to the 3 management tools that we have. Definitely review this Section A because it's important and it'll help you. Now we're going to move into Section B. Now, as I said before, when I put this together, I ended up with about 90 slides. And I took the analysis of the futures charts and put it on as a Section B. And we'll go very in-depth on how the government affects you, what the CFTC is going to do, how to spot accumulation, distribution, how to spot overbought and oversold, and to really see how this all works in a cohesive fashion for your trading. Thank you very much for watching this Section A of the tape. This is the end of Section A, and I look forward to seeing you again on Section B. Thank you.